Hey friends of future millionaires, Gregory Pierre Louis here, the backpack entrepreneur. In this video, I want to talk to you about who controls the Forex market, okay? Now, the governments and central banks have a lot of control in the Forex market, and they're responsible for about 80% of the movement that you see happening on the charts, right? But on the contrary, retail traders have very little impact or control in the Forex market. And when you fully understand this, it's obvious that the less you know about the Forex market, the more susceptible you are to becoming a victim. But the more you understand about the Forex market, the more you'll be able to profit from it. So let me give you a big tip that'll help this make a lot of sense. The Forex market revolves around the value of the world's currencies, and it's the main factor that drives all commerce. I'm going to repeat that for you. The Forex market revolves around the value of the world's currencies, and it's the main factor that drives all commerce. Now let's talk about the central banks, like the Bank of Japan, right? The Bank of England, the People's Bank of China, the European Central Bank, and the Federal Reserve System. What you need to know is that the central bank's policies outline how they attack concerns such as inflation and how they define our monetary policy for each country. So some of the global news events that are important for you to pay attention to are the Consumer Price Index, or CPI, the Gross Domestic Product, or GDP, unemployment rates, and the Federal Open Market Committee, also known as FOMC. And it's these important news events that determine the money supply for each country. And what you need to know is that central banks don't trade to make a profit, right? Their goals are to keep the currency rates low so that they can do business with other countries. I mean, just think about it for a moment. The international banks and investment banks have a very important role in exchanging one currency for another, right? And let's use international business as an example, okay? Let's take Microsoft and Apple products, right? Now, Microsoft and Apple are United States-based companies, right? And they're getting their products made in other countries, right? But in order to get their products created, they're going to have to exchange their country's currency, which is the United States dollar, for the currency of the country that they're doing business with, right? And this is where the concept of foreign exchange currencies, Forex, comes from. And when you think about big financial institutions and big corporations, they deal with large amounts of foreign trade at one time. I call this big money, and it causes movement in the market, right? Now let's talk about hedge funds real quick. They come second in who controls the Forex market to the governments and the central banks who have the most control. So you're probably thinking, what is a hedge fund, right? Well, a hedge fund is when large investors pool assets and capital together to create leverage in the Forex market. And lastly are the retail traders, who only make up a small percentage of the Forex market. You see, retail traders don't work for the banks, and the goal of the retail trader is to follow big money. And you'll hear a saying thrown around a lot, which is follow the trend, or the trend is your friend. And that's where it comes from. As a retail trader, your goal is to follow big money, which is the governments and central banks, and ride their wave. So I hope this video was helpful in helping you learn and understand who controls the Forex market. I hope you got value from this video, and I'll see you guys in the next one.